Welcome to BizTech's C-Suite Conversation Show. Today we speak to Yeoh Chen Chow, co-founder of Fave. Fave has been in the news over the weekend as it's just been sold for 45 million US dollars to Pine Labs of India. Now here to tell us more, welcome to the show, CC.
Yeah, thanks a lot, Brian, for having me, and thanks. Looking forward to be on BizTech.Asia.
Now, CC, could you firstly break down the specific of the deal that was done with Pine Labs, and what do existing investors walk away?
Yeah, so for this deal, basically, Pine Labs acquire 100% of Fave Group. So and basically it splits into two parts. The investors all get a cash payout, whereas for Joe, myself, as well as all the employees, the key ESOP holders, then it will be a mixture between a cash payout as well as a Pine Labs shares.
Okay, now how did these talks commence? Now, was this mapped out at the time of Pine Labs investment in you last year, or did it evolve?
Yeah, I would say that back then it started from, I would say that this whole journey was that last year COVID happens. Last year March April, Pine Labs became an investor in July 2020, right? So basically at that time when the offline world space got affected, I think our business was affected as well in March April last year, and Pine Labs came in and invested. And I think from in July 2020, and we work with them closely. They sit in our board as well. Since then, I think we work with them, and I think there's a lot of synergy as we see explore working together, and I think leveraging on it. But Pine Labs, I think they have built a fantastic name in India. They have been built a fantastic part on the credit card terminals, gift cards, and basically for us, we have Southeast Asia, and we have a space where consumer and merchants interact in the rewards cashback space, right? So I think for Pine Labs, this synergy basically means that they could actually enter in Southeast Asia in a more bigger way, as well as then they have a consumer's part as well, right? Consumer merchant interplay, and I think that's something that we're going to bring Fave brand, Fave technology platform to India.
And that's what they talked about as well, because they are very strong on the merchant acquisition side in India. Then you've got obviously that unique niche of the QR payments, and you aggregate dozens of brands into a single app. And so you give them then that regional footprint immediately.
Yeah, so I think in Southeast Asia, then we give them immediately regional footprint. We have 40,000 merchants that currently on Fave platform. So I think that sort of open up in here. And I think the interesting part is that in India, they got 500,000 merchants in the payment space, right? The credit card payment space, so and gift card space. So I think what we were going to do is be able to take this technology and cross-sells, upsell, integrated, basically built into the Pine Labs merchants in India, and basically enabling these merchants to now be able to have their FitPay functionalities, where basically enabling all of them to issue their own cashback and get the cashback return for the customers to return back to the same store, and then enabling the gift cards or what we call e-cards, where basically the stored value. So if you think of the stored value e-cards, basically today Starbucks, people will put in $100 into Starbucks and then they will spend it. But today, if you think of it, you're a neighborhood retail store or neighborhood cafe. No one is going to walk there and say, I'm going to put $100. But now this enables all of them to be able to do that. The same thing with in terms of loyalty as well. So if you think on it in a traditional way, the big players, they can hire someone to build an app for them. Maybe you can build a Starbucks app or build an Aeon app. But if you think of it, if a small brand, you'll not be able to do it. Or
That's
those
right.
like the smart card or the card that will stored value, right? So if you think on it like T-Life and all those brands, they have it. Watsons, they have it. But a smaller brand would not be able to do it. So I think what we're trying to do is basically take this and go across. Yeah.
Now, and that's a very important point, which I want to also bring across because, and this is regard with your investors. So Sequoia India basically owns stakes in both of you. Now, was that motivation then to consolidate both businesses together in view of Pine Labs' impending listing in the US market targeted at Q1 2022? So they take a short-term hit in terms of a valuation, in terms of a down round on your side, in terms of this acquisition, but that's the long-term play to play for in terms of the big prize, which is the listing.
Yeah, I think that Sequoia generally the way they do is that I think that they let us both sides explore. So I think that they actually have a very clear sort of independence across. So we have Sequoia board directors, Peter, in our board, as well as I think there's Sequoia people in Pilot's board. But I think that independently we reviewed, discussed. I think that there is a synergy as we play it through, because I don't think Sequoia would just basically just connect and say, okay, go work together alone. Of course, they would matchmake and let us explore. I think this has been how it has been the last 6 years, right? But I think this synergy has been amazing. I think we have worked with quite a lot of Sequoia portfolio companies over the years through different partnerships arrangements. But I think this synergy with Pine Labs, I think that the complementary of both their strength is not something that we have it. And I think what our strength is not something they have it. And I think the ability to have mutual respects and learning, I think that sort of, I think a lot of times is when we work with them, even after they became our investors late last year, I think that basically when they use the word we, they already think of Pine Labs and Fave together as a we, right? And I think that synergy helps quite a bit.
You know, CC, I've got to ask you on a personal level, what was yours and Joel's perspective and motivation for doing the deal?
Yeah, so I think that for us, we have built this for, so I worked with Joel for 10 years, right? Last week was the 10-year anniversary of working together from the Groupon days and then through KFit and Fave, right? So I think this 10 years journey of 6 years from KFit, Fave journey, right? So I think we have built to this point. And I think that a lot of times is that the impact that we can bring. So today we are serving Malaysia, Singapore, and Indonesia market. And if you think of it on our own, launching something into India market is something beyond us. At least at this point, we don't think that we are ready, right? Anyway, but I think that with Pine Labs, we have a chance to take a technology that built in Southeast Asia and take it across to India, and we have a 1.4 billion population. And I think that's transformation. I think the ability to do the impact. Joe will be leading Pine Labs consumer business in Asia, including in India, right? So I think that would be an exciting part. Launching India, of course, launching Fave in India will be an uphill battle. I mean, India is a very competitive market, but I think what we are looking at is learning, exposure, experience, and I think getting the Fave business in India to be the size of Southeast Asia, if we get some form of a product market fit, I think that's quite doable, right? Because India population is just way bigger, right? So I think the key is that, and of course, it's not going to be a purely just take whatever work in Southeast Asia and go there, but this will be a starting point, and then we'll adapt locally to get through. Let's say India, the payment will be through a UPI and whatnot. So I think it's a lot of localization understanding and blending what we have built here with the team that we basically, with from Pine Labs teams and some of the new hire in Fave India, and basically connect it up.
Now, you know, CC, this seems like a really smart strategy because it seems like a 1 + 2 = 5 strategy. Now, so this is counterintuitive to a lot of Malaysian entrepreneur thinking. So this is a criticism that has come up before in the past. So, you know, entrepreneurs are eagles. And a lot of times the criticisms of Malaysian entrepreneurs is they rather work by themselves on a smaller opportunity and they are happy being in their own space rather than combine forces with others and work on a much bigger opportunity, because this is a classic case of what you're doing.
Yeah, I would say that there's no right or wrong as well, right? I think every entrepreneurs have their own vision and dream on what success looks like, right? I think like over the last 1 week, we spoke to different people as well. I think that in the end, success could be very different for different people or different founders at different stage. So I think that the way we see is that we now have a platform to bring it to much bigger space. Maybe for some entrepreneurs in Malaysia, right? For them, maybe control is important, or maybe owning a majority stake is important, right? And that could be perfectly fine for that entrepreneur. I wouldn't say that is bad, but it's just that I think each different parts have a different play, what you look for. And I think for us, this, in terms of this, is that we exchange our stake in Fave into predominantly stake in Pine Labs, and that enable us to build through, right? And I think there's various forms of, I think, talks or rumors on Pine Labs going IPO as well. I think all those will be an upside if we eventually get to build the synergy.
Now, I want to take us back a little bit to your Fave journey, starting with KFit, because there's a lot of lessons there, especially with regard to the pivots that you did. I mean, Sequoia India got invested in you at the KFit level, if I remember correctly.
Yes.
Can you walk us through that journey and you know some of the key lessons that you learned during that journey?
Yeah, so I would say KFit, we started in March 2015, right? And that was just after Grab became the first unicorn in Southeast Asia. So they became the first unicorn in late 2014. So I think that the initial phase in 2015, fundraising, luckily, was actually pretty relatively easy because I think a lot of people felt they have missed the boat on Grab. They want to go on startups. And that was the time that they came in. So we raised a couple of rounds, and a few things that we did that we basically expanded KFit quite widely. We actually went to 8 countries, 12 cities, right? Whether from Australia, New Zealand, Korea, Hong Kong, Taiwan, Philippines, Malaysia, Singapore. And some of that turned out eventually, in the 2016, we actually had to shut down a few of them. So Korea, Taiwan, Australia, New Zealand, we actually unfolded. So I think as an entrepreneur as well, a lot of time is that build, and then if you don't think it works, we actually fail fast. So I think, and had we not done that, we would have taken on a few more years of the losses in those markets, right? So I think we went in, we tried, we couldn't get a right skill in those few markets, we cleared it, and I think that enabled us to build a much better unit economics to build on, and then from there we acquired a subsidiary of Groupon for Singapore, Malaysia, Indonesia. So I think Groupon is something that we have spent years there. We knew what it works, and we also knew maybe what it doesn't work. And I think that's sort of how we built it. Back then in Groupon, we run daily operations, but the technology, marketing, and everything, the digital marketing was run centrally globally. So I think that for us, controlling that piece, and I think when we built across, we knew that, okay, that's what we can leverage on. And we also know that Groupon is great to bring new customers for merchants, but Groupon is not something that great to retain customers at that point. So I think that's where FavePay built upon, where we want to enable customers to pay full price and get a cashback for next visit. Whereas for Groupon, a lot of time as you get a discounted, so some people feel that maybe am I a second-class customers, right? Whereas I think for FavePay, so then we go in and say, hey, now this customer is actually paying full price for first time, and they get a rewards that to come back at the same store, and hence build a retention and repeat customers for the merchants. So then depends on the scenario, I would say depends, the merchants now have the options and say at what point. So let's say example, when they open new outlets, then the deals business that we still have, that could be a good way to run. Or maybe there's a special promotion for Christmas or Valentine's or something, then that's a deals. But the day-to-day running, then that's where FavePay come in. And then the e-cards basically enable to upsell and store the value. So example, if I go there, usually spend $10, I may upsell them a $50 gift card, e-cards, where I can store it and I can use it, and or I can also give it to others.
Okay, and I'm going to come back to you on some more lessons that we could take away from your Groupon journey. But I want to ask you, in terms of lessons learned, for those markets that you shut down, what was the catalyst that made you pull the trigger? Those 4 markets that you talked about, Australia, New Zealand, South Korea, and so forth. What was there a realization that, okay, we need to cut costs, we need to shut these down? Was it that you were burning cash too quickly, or were there other reasons for that?
Yeah, so I think that a few parts. So I think one, I would say that we don't understand those markets as well versus other markets. I think it's one. And I think that in terms of cash, like as a pool of cash, if we cut some of the markets, we can then rechannel to other markets in a bigger investment way. So I think we sort of like, okay, instead of spread ourselves over 8 markets, we focus on the 4 markets. And at the same time, we did the acquisition of Groupon subsidiaries around the same time. Yep. So then, and hence we moved the spend there into other parts. So I think it's sort of, I think how Joe and me, we take a look at it is, we take a portfolio view, right? While we are still running the business, we take a portfolio view into different vertical, different markets. And that's how we're going to look at it and say how we're going to drive it.
Okay, that's an interesting lesson I think that entrepreneurs should take. Now, can I ask you, what are your thoughts on the tech ecosystem right now in Malaysia?
Yeah, so I think that tech ecosystem in Malaysia, I think that the early stage, I think there are quite a bit of supports. I think right now is where there are a bunch of tech startups that have built in from 2014, 2015, 16, that right now, maybe around 5 years, 6 years mark right now. So I think that some have hit the Series A, some have hit Series B, maybe C. So I think the key now is how do you take this beyond and what it takes to get through the next level. So I think that would be some of the key parts that we want to look into. So I think that, for example, that what are the things that can be propelled upon?
Okay, so but there is also a danger right now. So what's happened is, and you correctly pointed out, in 2014, Grab became the first uh, unicorn
Gone.
in Southeast Asia. We also had exits from the light of Patrick Grove, from the lights of Job Street, and so forth. So Malaysia was under the microscope in a very positive light. Today, that has changed because the focus on Southeast Asia has shifted to Indonesia and Malaysia. At best, we are probably now, in terms of our ranking, on number 4. What are your thoughts on this?
Yeah, so I was actually ex-Job Street employee as well. So I was there before they got acquired as well. So I think watching a bit, although at that time I was knowing pretty much nothing in the space. So I think that in terms of I think what Malaysia is strong at, I would say is that it's a regional hub. And I think today we see that a lot, not just in the early days of Job Street, or even right now, if you look at it, whether from Custom to Aerodyne to Kautim, Recommend, and a lot of other startups, right, in this space, I think we are all generally regional hubs based here. Because I think Malaysia still have a fantastic talent pool that can run day-to-day operations and at the right cost base. And also because of the language that we all have, we are able to adapt, whether let's say today to run a business in Indonesia, we actually have enough people that can communicate, at least in Bahasa Malaysia to the, so let's say example, when I went to Indonesia to do all hands, I can speak in Bahasa Malaysia, even though they knew it's different, but they can understand me and they can speak to me Bahasa Indonesia. Versus, let's say, another startup from any other Southeast Asia country will not be able to have the same leverage. And the same thing, I think our people, whether even when you say raise capital from Hong Kong, there are enough Malaysians that will know how to speak Cantonese, or Taiwan, or China. So I think that basically that enable us, and I think the adaptability that the market that we have, multiracial, multilingual, enable us to serve different markets as well across. So I think that's how I see Malaysia's strength. I think in terms of capital market wise, fundraising, I think it's a regional place. So I think basically, yes, there are some funding that can come from Malaysia in the maybe early stage to Series A. Maybe at the Series B and onwards, Malaysia doesn't have that much. But I think that a lot of entrepreneurs basically today, the world or the region is where you can play on. So I think that enabled that. And I think because Malaysian market is not super huge, that also enabled a lot of entrepreneurs in Malaysia to look beyond Malaysia early on. Because if you think on it, a startup in Indonesia, I don't need to think on beyond Indonesia for a long time, right? If you look at Tokopedia, they're still in Indonesia because the market is just so big. But for Malaysia, this enables startups to now think regional from the get-going.
Okay. Okay. And that's also an important thing. Your attractiveness as a business is really premised upon you being regional.
And that helps, right? And I think a lot of time is as we go regional as well, is I think regional, think global, but act local. So I think what are the things that you can synergize? What are the things that you can leverage across? And what are the things that you need to localize? So I think every market that we did, I think a lot of times we actually go down to the market and spend a lot of times. Let's say before COVID, I actually used to do weekly trip to Jakarta, right? Every week. And at a point I actually did, there was one week I actually went 5 cities in Indonesia in a week. So Monday in Medan, then after Bandung, Surabaya, Jogja, Bali, one day at a time, and basically go to underground because every city, every town is different. And the same thing as now we go to approach India. I would say India is not a country even, it's a continent, right? And different parts of India is so different. And I think that would be, I think what Joe, myself, and our team looking forward to is learning as well, to bring an impact and show that a technology and a team from here have a chance to have a shot at India. Although it's going to be tough. Yeah.
CC, that's going to be tough. But what are the, you've been on several journeys so far with Groupon, and then now with Fave, and then now your new adventure, especially with some of the lessons in your Groupon journey and some of the missteps maybe made by Groupon in China. What are 3 business lessons that you've learned that you can share with other business leaders?
Yeah, so I think that Groupon in China, I had a bit of the observation back then, but I don't not as hands-on. But I think that in terms of the 3 lessons, I think as entrepreneurs is, I think a lot of time, I think number 1 is, I think of where you want to get to. There's no right or wrong, but where you and your team and all the stakeholders, whether investors, partners, or where do you want to get to? What motivates you? What excites you? So think of the directions that you want to get to. And I think rally the troop, everyone into that position. So I think that's key. So I think and also a lot of time at the point is that, So there's a big picture. And I think the other one is within each quarter, or maybe within each year, or even within each month, is what is most important, critical. So let's say example, I just take on Fave, how we look at it. So let's say last year when the COVID hit, we went on a lot more conservative. We cut down a lot of the marketing spend, everything in the Q2 last year, because preservation of capital lasting long, because we don't know how long this COVID will be. A lot of time when the first 2 weeks of the lockdown, we were thinking, oh, maybe 2 weeks, right? At most 4 weeks. But now it's been a year of ups and downs, right? So I think preservation of capital, staying lean, going through was what is. And I think our team responded well, where they all volunteered to take a pay cut together in a one team plan and whatnot. And I think that when it comes to Q3, Q4, we came together and said, okay, now let's get our company to profitable. So that was a second key part. I say, yeah, we know we can invest further, but with this COVID is still lingering around, let's get to profitability. And we got to hit our best month in December 2020, as well as a profitable month. All right, so I think that was sort of, and a lot of times it's also rally the team, because once it's clear to the team and say, hey, this is what we're going to aim towards, right? And then I think in the Q1, early Q2, where when this with deal with Pine Labs is impending, a small team that was aware, we work towards this. And now I think it's rallying the team to say, how do you build up and scaling up Southeast Asia, bringing, let's say, for example, Singapore that has fully recovered from COVID, how do you continue to build upon? Malaysia, where there is still some challenges in the COVID cases up and down, how do we leverage on it? How do we build up? So that when things are over, we'll be standing on very strong, right? And I think now India will be a trial and error. Taking leverage on what we have learned last 5-6 years here, leveraging on Pine Labs 20 over years in India experience. How do we connect these two dots and take a few bets to launch, right? So we're likely going to launch in a couple of cities, maybe in maybe in a tier 1, one in a tier 2 or something, and basically test upon, right? And I think seeing where we go, and I think it's that scale will be adapt, what works, do more, what doesn't work, tweak, and learn. Because what makes us work in Southeast Asia will not all work there. And maybe there are lessons that we'll learn from India that we'll be able to apply back here. And I think the way we see this experiment building on India as well is eventually going to bring a ripple effect where maybe in the next few years' times, we will have a couple hundred people in Fave Group, or maybe at a time much bigger team that have experience dealing with India market. Which today, I think if you look at the Malaysia, Singapore market, not many people in this region have the experience of dealing with India market. And that could actually open up another flurry eventually where better people on their own or within here or even beyond building ventures that will go towards a bigger market.
Now, CC, thank you very much for your insights, and thank you for taking the time to be on the show.
Yeah, thanks a lot, Brian, for having me, and great to be on BizTech.Asia. I think looking forward to engage with everyone.
Now, I'm Brian Fernandez, and I've been speaking to Yeoh Chen Chow, the co-founder of Fave, on BizTech's C-Suite Conversation Show. Now, check out www.biztech.asia for business and technology conversations. This video will also be on our Facebook and LinkedIn sites, so please subscribe or like our various platforms.